Singapore's public housing resale prices have dipped for the first time in nearly 7 years after 5 consecutive quarters of slower or no growth. Analysts say that despite the drop, annual prices are expected to see modest growth and could stabilize as more supply comes on stream. Still, with the economic outlook looking more uncertain, the Housing and Development Board is also urging buyers to be prudent when buying homes and taking on home loans. Nikhil Kata reports.
More built-to-order or BTO flats are coming up across the island, part of the government's push to ramp up supply and ease pressure on resale prices. In June, about 6,900 flats will be launched, contributing to nearly 20,000 planned this year. Analysts point to the promise of these flats, including shorter waiting time BTO units and a wider range of new supply, as one reason for resale prices slipping 0.1% in the first quarter. Resale transactions also fell 4.5% on year.
This improves accessibility by giving buyers a chance to enter these locations through new flats, rather than competing solely in the resale market. As more of such projects are introduced, it helps to ease pressure on the resale market as well, especially in the long run.
But analysts expect prices to rise modestly in the coming quarters.
Although we may have over 140 blocks of HDB flats that will reach the end of the MOP, and so some of them will be sold in the resale market, that signals an increase in supply of resale flats. However, we will also see that some of these owners, because the flats are fairly new, could be asking for higher prices. So I think that we could start seeing a rebound in the HDB resale price index in the second half of this year, especially when Singapore is not suffering economic slowdown, and also there is no oversupply situation in the HDB resale market.
He adds that many recent million-dollar resale flats are relatively new units that have just met their 5-year minimum occupation period. While such transactions are rising, analysts say they remain a small share of the market and have not raised major concerns.
Here's how housing resale prices have changed over the years. 2021 recorded the highest rise in public resale flat prices since 2010, up by 12.7%. But the prices moderated over the next few years, thanks to government cooling measures, a boost in flat supply and other factors. Cooling measures saw the government tighten public housing loans in 2021, lowering the borrowing limit from 90% to 85%. Another measure a year later in 2022 made private homeowners wait for 15 months after selling their property before they were allowed to buy public flats. Other cooling measures included higher taxes when buying another property. The government also ramped up the build-to-order supply. Between 2021 and 2025, it said it was on track to launch over 102,000 BTO flats, more than initially planned. Analysts said this diverted some potential buyers of resale flats. Turning to the private housing market, analysts say growth is expected to remain slower and more measured. Flash estimates show the private home price index rose 0.3% quarter on quarter, down from 0.6% in the previous quarter, marking the smallest quarterly increase in 6 quarters. Private home transactions fell about 40% on quarter to 4,041 units in the first 3 months of this year, down from the nearly 6,700 in the fourth quarter of 2025. Analysts say the drop was due to a mix of seasonal factors, including fewer viewings during the Chinese New Year period, as well as growing caution from global uncertainties. Together, these contributed to a broader slowdown in the market.
The other reason could also be because of the macroeconomy, because of the Middle East tensions. So right now, there's still quite a bit of volatility in the situation where the things are still unfolding. And there's been some talk about maybe interest rate could rise again. So this could maybe impact market sentiment for some buyers who may maybe take a bit of backseat right now to observe what's going to happen to the market before they make a decision.
Private home prices are expected to grow at a more moderate pace as well. while global conditions have become more complex with geopolitical tensions and interest rate uncertainty, Singapore's residential market will continue to stand out as a stable and transparent environment, which supports both owner-occupier and investment demand.
And for more analysis, we are joined by Professor Sing Tien Foo. He's the Provost Chair Professor in the Department of Real Estate at NUS Business School. Prof, thanks for joining us this evening. Now, the first dip in 7 years, HDB resale prices. Is it too early, though, to say that the housing demand is cooling?
Yeah, when we look at the numbers, the first quarter of the years, you usually always we have to consider the seasonal effect as well, whether this dip in the resale index, is it whether sustainable? I think if we put in a broader context, if we look at the longer time series, these resale prices have actually grown by more than 7 years since 2019. And then it's more than about 30%. We compare to the last dip from 2013 to 2019, about 6 years, but it dipped about 12 to 13%. By take another 7 years, by double or even triple the price growth. So I think probably now is really have to take a look at this number, whether now is the time the correction is taking place without considering the other uncertainty, especially in micro aspect.
So you feel that this dip is actually quite timely. It's about time that it is reaching these levels, right?
Yeah, because if it's already about 7 years of growth since 2019, after the social distancing was removed, I think we see the very steep prices increase. I think the large BTO supply do have some impact. I think we draw away from some buyer from the resale market into the BTO market. This has some probably impact of softening the growth, but we only start to see this slowing down in 2025 because 2024 is still a very strong growth of about 10% per annum. Right, 2025 go down to about 3%. Now 2026 is maybe a time to actually observe carefully whether this decline is actually temporary or is it more sustainable in the long term.
Okay, so as you said, more supply is one factor. What are some of the other factors contributing to the drop?
I think we look at the pricing as well. I think the not just a price decline, the volume has also dropped in first quarter. So they actually multi-factor. I think supply is actually one important factor. So we look at the new supply, I think the price gap actually widened. When we look at price gap widen, and then there are more supply of shorter waiting time. And also the policy of pro-family policies. There are a lot more young people actually may switch from resale market to the BTO market. And also, if you look at the last few rounds of BTO exercise, the actually application rate has also come down significantly. That also indicated the chances of them getting their queue number is actually higher. So it probably also have some impact, drawing some of the young buyers to the BTO market.
Okay. Now, conversely, in the private market, the overall property prices have risen. So this divergence, how significant is between the two markets? And what does it tell us about the buyer profiles?
Yeah. Again, I think we see the similar pattern in terms of growth. Since 2019, I think it's a consistent kind of growth about nearly 7 years. I think these quarters, we see a slight slower growth in this quarter, even though the slower growth, but the quantum, absolute price level has been already very high. So I think this is something we probably have to also carefully evaluate whether this is due to seasonal effects or is this something that the market start to do, has some corrections in terms of pricing and demand as well.
So speaking of market correction, I mean, now we also have a lot of global uncertainties, right? And authorities have also flagged uncertain a macro outlook. Now with the cost of living concerns, along with the next phase of BTO launches, how is this going to shape buyer decisions?
I think if you look at the Middle East situation, especially the Iran war since 28 February this year, when the war first occurred, I think already since then already more than months, and there's no signs of ending about the war. But this is something that I will call this a grey rhino effect, because you see this thing happening. There will be some impact because there's impact on the global logistic chain. There also go impact on the oil prices, because the Brent oil prices already gone up to $100. Whether we're going to see this thing going to be resolved in the shorter time. Whatever outcome will turn out, I think this will be probably some impact on the global inflation. And then what will happen in the deeper kind of context, we also have to worry about the other kind of impact, especially the supply chain. Because look at the fertilizers supply, especially from the Middle East, because I think now, because of the closure of the Strait of Hormuz, I think it's difficult for them to actually acquire or purchase some of these fertilizers. How would this impact the productions of agricultures and so on and so forth? I think this event, probably we need to actually observe them more carefully, especially when we need to commit a longer term kind of bigger ticket kind of purchase in property prices. In property, I think probably it's good to evaluate what possible financial kind of uncertainty and so on.
Perhaps a wait and see strategy for now. Like you said, buying a property is one of the biggest ticket items in most people's purchases. All right, Prof, thanks for joining us. And that was Prof. Sing Tien Foo from the NUS Business School.